And welcome back to another episode of The Credit Authority. Once again, I am your host, Rhonda Kulch, and I am so glad that you tuned in today. Before we start our segment, we always would like to thank our sponsors, so thank you so much to Equity First. If you are experiencing credit and or financial challenges for yourself or for your business, consider reaching out to any one of their trained professionals. They are bilingual, nationwide, and waiting for your call. They could be reached at 631-714-4822. And with us on the phone today, because I wish he was in studio, is my friend Mark Bianchi with Park Hill Advisory Group. How are you?
I am doing great. How are you?
I wish you were here, but I understand that you are in Nashville right now?
I am currently in Nashville, correct.
You know, I know that when you were in New York, I got to see a little bit more. And what I love about our time together is really embracing and having a better understanding about what Park Hill Advisory Group does. So if you could do me a favor, explain to our listeners the industry that you're in, the niche that you serve, and who is a good client for you.
Sure. So basically, we concentrate on tax mitigation strategies for clients that utilize the IRS codes that have been approved and applied on tax returns. Our services include doing cost segregation studies, research and development credits. We also do investments that have charitable purpose to them, which I would like to jump in a little bit further on that later on in the show. And a variety of other things for opportunity zones, drilling funds, anything that can help a client truly mitigate their taxes.
That sounds very scary and very overwhelming, right? So I'm a business owner and I'm listening to you right now, and it sounds so overwhelming to me. So when you are meeting with a client, how do you initiate that first part of the conversation so that they have a better understanding of what that means and who's a good fit for you as a client?
So when we have conversations with clients, many times it's to talk to them about where they are with their finances, where they are with their business, and what they're looking to achieve. You know, unfortunately today, with a lot of things being very expensive, when you talk to clients about helping them mitigate their taxes and repurposing those dollars into paying premiums or paying their rent or reducing some of the taxes through the passive income. So we just have a very open dialogue with clients and just trying to feel them out, because as I have told you many times, Rhonda, that taxes is one of the biggest expenses that a taxpayer, a business owner, has to face. So these tax codes are in place purposely to help people minimize their taxes. The unfortunate thing is that not many people take advantage of them.
Is there a threshold for somebody to be considered a client for you?
Well, it really depends on what we will look at what their effective tax rate is, because, for instance, if somebody looked at an investment that had charitable purpose, and they were looking to be philanthropic and in return also receive a deduction in their taxes, we would really want to look at what the effective tax rate is if it would benefit them. I would say that in this space of minimizing somebody's taxes through an investment with charitable purpose, it would be like the New York resident, New York City resident, probably, anywhere from, $500,000 and above. That would be the ultimate client to help them see the most potential on it. When you ask me who's good for this, who are the people that I focus on business owners, doctors, attorneys, accountants, financial advisors, a full gamut of different clients. And you'd be surprised, Rhonda, how many clients that we talk to that have not been taking advantage of these tax mitigation strategies that have been around for, 100 years in some cases, maybe a little bit less with oil and gas and other things. But, they're out there. We like to educate first before we ever try to have them invest. We want to talk to their CPAs and their financial advisors. Currently right now I have about, 500 clients, which gives me about, $450 to plus, CPAs who are filing their tax returns that we have dialogue with on a yearly basis.
Now, we're discussing the fact that this is for tax mitigation, but yet we're talking to business owners. I just want to clarify, this is for personal taxes, not business taxes.
No, it could be actually used for both, and that's a great question because, if you're able to, a lot of businesses are S corps, and a lot of the profits flow through. So if a business is able to take a deduction and it minimizes their cash outlay, it gives them a significant amount of more money to either, acquire more inventory, buy another building if they want. The whole purpose of tax mitigation strategies and how a client utilizes it is to mitigate their taxes and give them an additional liquidity event that they can repurpose into anything that they want to. Business, personal, pay for the education, pay for a car, take the money, the savings, and go buy another building. There's multiple things that businesses and individuals can do to benefit this.
Now, a lot of times when we're talking about taxes, we have the income and we have assets. Is a client that might be income, maybe their income's not as high, but they're asset rich, is that also a good client for you?
Well, if they're asset rich, if the assets are producing income for them, and they're potentially looking at how to offset that through, if it's real estate, through a cost segregation study to accelerate the depreciation. But at the end of the day, if they are asset rich and income low, it may not benefit them. What people have a tendency to, a lot of people out there who sell these type of services, they always use an effective tax rate of 40% to get them to bite, but it's not 40%. 40% doesn't happen to taxpayers until they reach a certain threshold, and it's usually over 700,000, where that anything above that is going to be at a higher effective rate. So what we like to do is we like to sit with the clients, we like to educate the clients, we like to show the clients what they can expect at an effective tax rate rather than a marginal tax rate if they would take advantage of this. So an asset-rich person, which there are many of them out there, may not have the income coming in a particular year. This may not benefit them. But what I would say, Rhonda, is we would love to have any type of education because in the future they may have an exit strategy that they're looking to do to get some liquidity or just to unload certain things that we can potentially help them mitigate that by, again, I always say, following the IRS guidelines.
I love it. Now, obviously, you're in Tennessee. You have office locations in other places as well. Are your strategies universal and then you need to plug into state code, or is this all done on a federal level?
Everything is done on the federal level. It all depends on if the state follows those guidelines. For instance, and that's a great question, if somebody made an investment that had charitable purpose and it went to a charity and they were able to get the fair market value of that asset, a New York State, New York City resident would see a greater return on that investment as far as taxes compared to a New Jersey, Pennsylvania, Connecticut, Massachusetts, which they don't allow the state deductions. But states like California and Arizona, Colorado, they allow it as well. So, but there's still a huge benefit when you're just using the federal level. But when states do follow it, it significantly increases the return on the investment for the client in the sense of tax savings.
Understood. Now, Mark, if somebody wants to reach out to you or any one of your affiliates at Park Hill Advisory, what's the best way for them to contact you?
The best way I would say is through email at md@parkhilladvisorgroup.com. I would then therefore, reach out back to them. I would give them a calendar app to schedule a time with me. That is probably the best way to do it. And, our response time is, very, very quick. And we do, I'm sorry for interrupting, and Rhonda, when they do reach out and they just want to have some information or see if there's a benefit, and I've shared this with you before in the past, we do free benefit analysis for clients to see what could be best for them. And it'd be up to them and their CPA to determine if they want to move forward or not.
I appreciate you. I appreciate you taking the time this morning to chat with my listeners. Once again, we are speaking with Mark Bianchi, Park Hill Advisory Group. Stay tuned. We're getting ready to bring on our next guest.